Hello, I'm Cornelius Wilson Brown III. I am the founder and the lead educator at the Solomon Trading Institute. If you have been looking at our information for a while, our social media, things of that nature, and you have been wanting to book a call and talk to us, I would love to do that for you as well. I would love to get together with you. And here's what I want to do. I want to see if whether or not we'll be a good fit. Whether you're a trader now and you're not getting the consistent results that you want, or you are thinking about becoming a trader, we have taken people from zero to hero. We've taken people who had little trading knowledge to no trading knowledge, and we've made a difference in their lives. Unfortunately, this is something that you weren't taught in school, so therefore you don't understand how to approach markets and money markets in a day trading fashion. And let me say this really quickly. Those of you who are skeptical about this, you really are going to have to drag yourself over into the technological age and into the 21st century. Just a cursory look around Walmart or any shopping center. Sometimes you can see there are more machines working than people. There's a digital movement that's taking place. And if you don't know how to gain access to things that were once inaccessible, then you'll always stay behind the curve. So now here's what we want to do. We want to help you. Our goal is that 1 million people make $1 million. And that may be a number that seems like it's kind of gaudy, but in just a moment, I give you a statistical reason why that is practical and may even be an undershot. So come on, book a call and let's see what we can do. Now, it is important for me to tell you and let you know and explain to you that trading is not for everybody. Trading, there is a risk in trading commodities, futures, anything of that nature. Most people enter into the markets without any kind of education. And so the government knows that, and so they require us to put this here so there won't be some unscrupulous person promising people that without any work and without any effort and without any knowledge that they can become rich by engaging in money markets, because that's absolutely a lie. You can lose your socks, you can lose your shirt, you can lose your hat, everything in the money markets if you don't know exactly what you're doing. And that's where we come in at. We come in because we want to mitigate that, and we want to give you an education that you can actually take to the bank. And what we do is we teach you about risk, because in order to trade, you must have what they call risk capital. And so we teach you about that risk, to know that risk and to understand that risk so you can know reward. Now, unfortunately, there are many people in life who've decided that they aren't going to take any risk. And unfortunately, the people who don't take risk work for the people who do take risk. The people who don't take risk, their life is controlled and restricted by people who do take risk. So it's now time in your life to step out and have faith and believe in yourself. And that's what we'll help you do. When we talk about the markets, well, if you look at it, this is a daily synopsis here, that there's $437.4 billion in the market. Now, when you think about that, there's only 350 or so million Americans. I didn't look at the last census data, but that's about a cursory overview of how many people populate the United States of America. And so if every person had $1 million, that still would leave $436.4 billion plus some, okay, plus 600 or 700 more million left. So what I'm saying is that you need to come on over and not be so skeptical. The world is changing right around you, and we love to have an opportunity to transport you and to help you make this change. Now, we have to facilitate your success. We have what we call a live tech education room, and in that live tech education room, we provide an analysis so that what you have been taught throughout your matriculation through our program, you get an opportunity to hear somebody giving you the analysis so that you can recognize all conditions that you're seeing. And today I have with us one of our facilitators. He's from the Pacific Northwest. His name is Dennis C. Williams Jr. from Bellingham, Washington. He's an MBA. He's an accomplished financial person. He even has his own program as well in terms of helping people, and we'll learn about that when we do our Word and Wealth podcast. However, this past week, he and another gentleman facilitated the live tech analysis room, and he oversaw a room that, based on the Brown Goose strategy that we teach, $6,105 minimum. And there were some trades that went further than, what we try to do is get 3% per day. So there was some that went further than that, but this was a fun week for us. Hey, Dennis, welcome to a market recap. Usually I do this, Dennis, on a daily basis, but I moved it to a weekly recap now. So how are you doing?
I'm doing well, thank you.
That's good.
Good to join you.
Yeah, thank you so much. Thank you so much. Well, how was last week? What do you think about it? What were your thoughts about last week?
Yeah, it was a good week,
Mhm.
and so looking forward to walking it through with you.
Wow, wow, wow. That's cool. That's cool. But let's jump right in. Let's dive right in. On March the 13th, 2023, there was $2,645 per contract potential in that room on that particular day. So getting right, jumping right in, Dennis, and you guys for facilitating this thing. It was great. I imagine jumping right in and seeing what we had here was potential of 135 bucks. We can see where our rules are met, and we can't wait to teach you so that you can understand why this was the optimal position and why this was a winning position. So right here at 9:06 on that morning, hey, we jumped off with $135 potential in that contract. All right, moving right along. The next trade, it then triggered about 9:56. And we see that the market flipped because the market was going short. And now we have a new forecast because now we've made a statistical change. And we'll talk about that in your freshman class. How do you know which way the market is supposed to be going? But when we look here, we see right here, our rules are being met. We see there was a target there. And right there, as you can see, we had an entry right there. Looks like a trap entry right there with $150 per contract potential. Do you remember the market flipping on that day, Dennis?
I did. I certainly did.
Mm-hmm.
We found that throughout the week, actually, it did a lot of that, about bouncing back and forth.
Mm-hmm. I see. I see. So was this week a demand week or a supply week, or how was this week forecasted out?
Actually, it actually was kind of a neutral week. We just had to sit back and watch and see what it did.
I see. I see. All right. So moving right along at 10:02, we had in the live tech room, we saw this here trigger. Now this is a look like a mid probability trade because as we can see that we have a minor structure there in the way here. And so, but the market, because I guess because of that flip, and a lot of times when it does flip, when those Elliott waves go from, you get to that fifth wave and everything flattens out and then the reversal happens. Oftentimes when that happens, it does have enough momentum to kind of blow through anything that gets in the way because they're really bent on stopping those people out who went short. If that makes any sense, Dennis.
Yeah, no, you're spot on. Yeah, they're again to ensure that the market is liquid. They end up taking trades that people want to trade, but then they realize they need to make money, and when they do that, they manipulate the market, causing people to think the market's going in a given direction, and they make money.
Yeah,
You know,
and
and we
those
have to know
stop.
to watch it.
Yep, and those stop outs there, when they move quickly too, those straight line moves. So thank God we have a system that's self-funded, stress-free, and we don't worry about that. So $170 potential on this day. On the next day, looks like 102 next day, but the next trade, $125 potential. This was a humming day, it seems, because that triggered at 10 o'clock, a little bit after 10 o'clock on that day. And so right here was a tight management, but well over the target that we like to look at least to have in there. So looks like that was over 20 ticks. So it says $120. So 5, 10, 15, 20. Yeah, so that was 24, 25 ticks, something like that. So that was a good one there. And let's look at the next one. Move to the next one. Let's see here. And so we see here, this one is the last one we talked about. Here's the next one. So wow, so this is a major structure right here in the way, Dennis. I see. And we can see the reaction right there too. I don't know if you remember this one or not, but
You get in and get out before you hit it.
yes, and that's why we had the target right there before we get to trouble. So a lot of times people can't be successful trading because they're greedy. And so they want the market to go up here. And so when they reach trouble, they don't capture the profit. And then what ends up happening more times than not, they end up giving back everything that they got because more times than not, that market is not going to fight a major structure and keep going like that. But there was an overall larger time frame reason that the market was moving so strongly, but that's not always. That's only about 20% of the time. So here we go another way here, here. So we have a big profit, target on this one, $255. I like them like this. Is when you see those big profit targets like that, my eyes light up because that means I can tuck my stop loss in, and literally be able to enter this trade with some freedom for the market to vacillate back and forth and kind of tuck in right there. And as you see, that runner contract would really been able to break through there. So when you have a lot of room here, that means it takes a lot of power to get here. And guess what? All that power may mean that you can get a breakthrough. But if there's not enough room, you can't tuck your stop loss right in there and break even +1, if that makes any sense.
Certainly does. And we look for those opportunities.
Absolutely. So let's go here. We'll go to the next trade. Here, so there was a $215 potential here. Took a lot of heat on this trade here, a lot of adverse reaction, but came close to stopping us out on this one, but we got to follow through here because we, the momentum was going that way. Plus we had probability because we had reached over from this shaded area. So this shaded area, when the market moves out of these shaded areas, it lets us know that we have one of the third components of recognition of good trade opportunities. One is the structure of the market, and the other one is the momentum that's in said structure, and then the probability is shown when the market, we call this change in lanes when it goes from dark to light. But that's something that you'll learn too. I'm telling you, what we do is amazing and it's fun. So moving right along here, here was the next trade, $280. That was a big profit target spot too. There was something in the way right here, this major structure. So that is the reason we, in our strategy that we teach, is that you take profit. You take profit. You've already exposed your capital, and you have an opportunity to take profit. You take it. You don't let the market come back against you. That's actually one of the violations on our evaluation sheet that we have and kind of talk about as well. And so this is one of them that gave a heat check. All right, then we went here. As we can see here, this was a big day. Remember, there were over $2,000 that day potential using our software and our rules that we made. So here, that was 185 on that day, on that trade, then 215. Now here was one where we would have had to fight through something. So when we have these trades, where there's something in between the target and the entry, then what we do is we label this as a mid probability trade. It is probable because the screen is green, but it's a mid probability trade because you're running into the edge. But over here, the market has shown probability of going here. So it's still, so that made it, an attractive opportunity, but it was still a mid probability opportunity as well. So that's what you will learn, those kind of things as well. So here, 245, another big target here, So that was a pretty good one there. I love those kind. We kind of stopped out with the runner contract here. As you go +1, it didn't go. There are times where it will go. So it's always good to be able to have enough room to stick your stop loss in just in case you are able to go. All right. And then there was another one here. As you can see, we're able to break through and get to the bigger target. So this is a prime target that we took profit on. We were able to get our stop loss here to break even, wait for this to break, and wait for it to reach up there and go, that way. So once we get this break, then now we start trailing this yellow rope. See that yellow, that dash right? We start trailing that after we can get here, and after we break liquidity, then now we get tight so that we can capture the full move. And especially running into another structure, which was up here, we'd have wanted to take profit anyway. So that's how we do that. Pretty slick management, huh, Dennis?
It's all pretty clear. Just got to practice.
Yeah, that's true. And so here, 245 here on this one here, So we have the same thing. We have the target there. We can slip our stop loss here. That of course got stopped out, but that's how it goes. But actually, once you break it, this one had already broken liquidity. So on an aggressive management would have been already the trail the yellow because we broke a liquidity spot already. But you can play it either way because that's the thing. But you've already been in profit by the time it does that when you have these large target marks here. So one of the things that we talk about then is that there are several students who are working with a prop firm that we're affiliated with. And this prop firm does allow you to use their capital. So basically, all you have to do is get connected to us. We teach you what to do. And once we teach you what to do, then you take these evaluations, and then you are now able to leverage other people's money in your own, own personal trading account. So like I said, it's time for you to, catch up. So then as you're going into March the 14th, the next day, coming off of such a high day, I bet you felt pretty good going into the 14th. Huh?
Yeah, it was a good day. No, it certainly was. The previous day was pretty generous as far as number of trades.
Mm-hmm. So on March the 14th, let's go right to work here. So we have a $50 potential trade here. So I can see we were here tight. All the rules were met, but we did have something in front of us that we've had to probably take profit on. And also, this is 836. This is what we call the volatile period. What do you think about that period, Dennis?
When I see a volatile period, I tend to kind of sit back a bit and watch.
Yeah, wisdom. That sounds like wisdom. So because our growth plan, the way we do it, and we talk about growth of an account, not just trading. So we use our software that creates this consistency to help you grow your account. Now, we're not financial advisors, so we can't tell you how to do it, but we shoot for like 3% a day, in our growth account, to grow our accounts. But we can't talk about individualized numbers or anything like that. But the strategy is a 3% strategy, But in terms of how much you use and how much money you have, we don't get into that because we're not licensed to give you that kind of advice. But just the strategy is a 3% strategy that we have. And oftentimes we beat that strategy. What do you say, Dennis? What have your experiences been about the strategy, our 3% strategy?
I've generally been pretty consistent. But I mean, 3% is great, but you can actually do with less and still 2% compounded is just phenomenal.
Mm-hmm. Yeah, when you talk about compound interest, man, you talk about the eighth wonder of the world, basically.
Yeah,
it's amazing.
so it's just the bigger issue on the growth plan is just being more focused on just kind of being consistent and not trying to do the whole thing all at once.
Yeah, you got to have a big picture mindset. But I mean, it's really easy, and that's the way we develop what we have. So on the day, 65% there, and look, $365 potential on this trade here. And as you can see, I mean, all trades look the same. There's the target on that one. There's the target on this one. So that's the reason that we can grow money, because what we're doing is something that's consistent. It's the same every day. Now, if you don't have a software or an edge, that's what we call this money market edge. If you don't have an edge, then you can't create a consistent and repeatable action. That's what systems do. They create repeatable actions. They create predictability, and that's what we have. And that's why we're so successful. Why we can be on an international Zoom like we're doing now without any kind of trepidation, because this is what we actually do. So we move right along here and see, man. So 330 on that one, 330 on that one. So we got some wide targets there, some big spreads, big training session there.
Yep.
Yeah, love it when you see
Especially
it.
the second one.
Say it again.
Especially that second contract, you've got to.
Yeah. See, you'd have made a breakout here. See it. Now here you wouldn't, because you'd have been here and at your 3% target, and you'd have come up to break even after your 3% target is hit. You'd have been stopped out here. See, but then here's the re-entry, because it's still the same. It's still the same frame.
Mm-hmm.
You know, because over here is the prime. These are subprimes. So here you got stopped out, and then right back in here, because you're still working that same one. And then you'd have gotten there, you'd have been able to get the break even and just kind of watch it idle and just watch them fight here. And you'd have been able to join them after they broke out. Those are beautiful times right there, when you can get in there like that and let them and get to break even, get enough room to tuck your target in here. So you don't want to jam it up here, you run a target up in here, you want to jam it up, you want to give them a chance to break it. And if it gets stopped out here to Blue Road, well, oh well, you gave yourself a chance because you had already met your goal right there. Does that make sense?
It does. It certainly does.
Mm-hmm.
Sweet.
Yeah. So let's go here. So it's got a lot going on here. So you got there 145, 140. Then they came back. Look at that. How you could have tucked in and just trail. Now you would trail and you'd been up there, because after you break, then that's when you tighten the stop. But before it breaks, you got to let it loose, because you got to give it room to break. And once it does break, as long as it doesn't come back and harm you and try to take away what you've already made, you know. So
it does require being a bit relaxed and allowing it to do what it does.
yeah, you know, and that's the junior class. That's the class that Joey teaches Dennis about management. And so that's one of the things that you'll learn, that whether you put your stop loss after the entry, like once you enter into a trade, see, Dennis, this is the way I see it. So trading is like flying an airplane. So there are 5 phases. There's the taxiing down the runway, and then there's the liftoff, that's the 2, and then the leveling, that's 3, and then the descending, that's 4, and then the landing is 5. And a pilot has to be good at all 5. You have to be an A in all 5 of those categories. Yep. Or else, there's going to be some a tragedy. So with trading, it's the same way. Forecasting, where should it should not go. If it's above what we call fair value, you can't see it, but that's a line down here on our chart. If it's above, it's supposed to be going long. If it's below, it's supposed to be going short. And then we recognize momentum. We have a way that we do that we teach you, that we recognize, do we have strong momentum or not a full momentum? And once we do that, then we move here. This is actually phase 3 of our training plan. Phase 3 is the entry criteria. And so we teach you how to enter. And then once you enter, you have to manage and exit. And you're either going to manage by being stopped out, or you're going to manage by trailing out after we get a break at our target liquidity line. And there's a target on every trade. So that's how we do. That's how we do that. And that's how we manage that. So here were the results of me trading that day. So I did that one. So that was that day, 1645 on that day. Now, one of the things is that, and I wrote this in my book, Dennis, the success, how to be successful like this. And like I always say, and I'm gonna continue to say that now, it's a shame, because I was a part of public school education, that this isn't just taught. Like, this isn't rocket scientist. Things like this was presented years ago as rocket science to keep you uninterested in. Because if one thing, if you kill a person's hope, then it's like there's nothing left after that. So if I can continue to kill your hope on doing things like this successfully, then you won't look into it, because you might find out that you can do it.
Exactly. And that's true for any skill, right?
Mm-hmm. Yeah, you might find out you can actually do it. Yep. So their habits. So wealthy traders who are consistent and profitable and independent and confident, consistent, profitable, independent trades. And this is on page 19 of our book. And there are several reasons, and we can go over it, but I just want to hone in on one. Number one, they're profitable because they're patient with winning trades. That's what we're talking about. We get to break even, we just wait. It's a winning trade. We're already in good pole position. Let's see if we get us a break. If not, and we get stopped out with the runners, okay. But they're impatient with the losing trades. Winning traders, wealthy traders, they know where they're supposed to get in, where they're supposed to get out. And when the trade gets to a place that they're supposed to get out, they do, but they don't allow the retracement going to that place to spook them, because they have they're steely, like a computer. This is what I'm going to do. I'm going to react to this situation this kind of way. But they understand that making money is more important than being right. Now, what does that mean? Well, when you enter into a trade, you think that you have done the analysis correctly, or else you wouldn't have entered into the trade. So sometimes you hold on to that analysis too long, even though you're looking at indicators on your chart or things on your chart that's telling you that what you thought you saw has changed. Not that you were wrong, but there's something that has changed. The condition has changed while we were actually in the trade. So, and they are able to cut their losses, and that's what this means. They're impatient with the losing trades. They don't allow their ego to keep them into a trade. They also look at charts as pictures of where traders are lining up to buy and sell. That's what we do. So we put what we call liquidity lines on our charts. We put manipulation lines on our charts, and we know when we see the counters move in certain places, we can actually see the people in our mind's eye. We can actually see the people transacting business at that place, because that's the place where the business is supposed to be transacted. Well, what we do is we don't want to get into those transactions or those exchanges of contracts and those that volume buying, right? We don't want to do that. What we want to do is we want to wait and see what was the final result of that exchange there. And once we see that, we see the market moving up across our ropes, our color-coded ropes, and we know what is actually happening, and we see the people buying, and we buy with the people who are buying at a discount, and so are selling at a premium. That's what we sell, and that's what we buy. We buy at discounts like they buy at discounts, and we sell at premiums like they sell at premiums. So that's how we look at the charts, and we can tell that all by our by what we teach. Wealthy traders also know exactly where they would exit for a loss or a gain, and they know how they're going to do it. All right. They approach each trade like it's their first, regardless of the outcome of previous trades. So every trade is its own baby. It's unique. The market is dynamic. No two trades are alike. All right. So they forecast on zones. So we look for our zones, our accumulation zones. We look for manipulations in those accumulation zones with institutional activity and through institutional names. We look at these zones and we watch, and we are able to break down the activity in those zones intelligently. And so therefore, when we make decisions, they're solid decisions. And then this is the one I want to kind of talk about in this recap, because wealthy traders understand this. The fact that you can be confident and uncomfortable at the same time. If you don't get this part, it'll be a struggle for you to trade, because when we enter into the trades, they don't look like they're going up. That's purposeful. That is the reason we are winning and others are losing, because when the market looks like it's going up, well, it's about to come down, right? What goes up must come down. So if we want to make money as it's going up, we get in before it actually takes off. And that's what we do. And we get in early. And if they absorb us, we wait and we get in again. Because they can't keep absorbing us down here at this low price, because at some point they're going to have to make money. So at some point they're going to just let it go and let you go as you enter in those crucial spots. But my point to you is that those spots that we enter in, they don't feel good because they don't look like the market is going up. Because we wait, when the market goes up, you lose. It's too late. You don't buy the news, you buy the rumor. The rumor that is going up is what happens in our zones that we teach and that we look for. Okay. So March the 15th, that is a little light day, and I think I know what the culprit was.
It was a day where we had to be challenged to be patient and wait.
Mm. So
And
you want to tell them about these folders and what they mean?
yeah, well, those are announcements that come out, and you don't trade on news. You know what's coming. You sit back and wait, and then you watch and see how the market reacts. And so from that perspective, since we tend to trade in a rather tight time frame, then in leading up to that, there really wasn't a whole lot going on.
I see. So let's get right to it. So on this day, looks like there was only about 180 bucks right here on this particular trade, potentially here. And on this one, 180 bucks here as well. So let's see where you're able to get 3+. So 3+ means that our target is always set at 3, and if it goes beyond that, that's plus. So some trades we call them a three pluser. So here look like you were able to get 3+ on this one, because you'd have been your stop loss would have been hit right there, because you'd have got tucked in at break even, because your first target was already hit at 100. So here, let's see, you'd have been in here. Okay, you'd have been 3+ here because 3 is in here, and then whatnot, because you'd have been waiting to see. Well, once the yellow line didn't hold, no plus there. But at least you'd have been able to get the 3 on that one. Let's look at the next one. The next one, that one, this one. You got 3++ on this one. You enter here, and then stop loss here after the first target. You'd have come to break even, and you could have just sat right there and break even. Yeah.
Yep, you just write it.
Yeah. Okay, to break even and set there. Yeah, that's the runner. That's the thing about it. Sometimes you'll be tempted because it'll go up and you'll see the money, and you'll be tempted to run up here and get stopped out. But look at all you're missing out on. Because that's where the greed comes in. That greed stops you from making a lot of money, because right here, as long as you got in here and you were at break even, this wasn't hurting you. It was giving you an opportunity to see where you're going to get a break. This is the liquidity line there to see if you're going to get a break of it, All right, so let's go on March the 16th. This is Thursday. So seems like we're at $1,475 per contract here. So like that was a pretty good day, 200.
It was.
Yeah. The only time would you say the only times we don't have real good weeks would be sometimes when they're near holidays or something like that. But other than that, this is almost something you can kind of depend on. Would that be a fair assessment?
Yeah, I think so.
Yeah.
Definitely. But again, you're not going in expecting anything. Generally you're just looking and hitting your goal for the day and then walking away.
Right. That's true. Yeah, that's true. So let's look at the trades for this day. So here on this day, man, it's beautiful. You see it set up in it right there. It's just begging you to come take it. So this day, $95 profit potential here on this one. Probability was there. The structure was there. I don't know if the momentum was there because of the time, and momentum hadn't had a chance to build yet. But with that being said, that was a great little scalping opportunity for those people who trade during that aggressive period. Here's another one. So at 9 o'clock, when everything gets to kind of what we're looking for, here's one for 175 potential right there using our brown goose strategy. So all that we're doing is basically forecasting, making sure we know where the market should and should go. That's step one. And then step two is called recognition. We recognize, and do we have the probability to profit, the probability, the momentum, and the market structure? Is the market even structured to go up or down? Because it has to be structured right? And then after we do that, we have an entry criteria, a 5-step entry criteria. In the freshman class, you learn steps 1 through 3. And then your sophomore class, you learn steps 4 and 5. The junior class, you learn how to manage. In your senior class, you prove that you can do it. And you trade in live tech with us, but you'll be trained on your evaluation account. And then once you pass that, hey, you're ready to go. So when we look at this, $265 per contract right there, there. So he was a big profit target here. Been able to get in there. Might have got clipped just a little bit right here. But this will be an in-game, an in-game choice then right here, because we got all of this room. I don't know.
Yeah, I wouldn't be greedy. I would have taken it and
you'd have been stopped out right here, wouldn't you? Yeah, because we are near fair value. So
no.
Yeah. But your first target would have been taken out easily. So yeah. And when the pluses are good if they come, so here we go. We got a pluser here, don't we? Yep. Barely. You see that? Right in there, you'd have been able to take the initial target off and then tuck right in there and see what we got, see what the end is going to be. It looked like you'd have broke through there, and then you'd have been trailing that yellow. Yeah. We call that a Forrest Gump. Forrest Gump, when that runner is Forrest Gump. And sometimes Forrest run, and then sometimes just like in the movie, he stops in the middle of nowhere and says, I'm tired, I'm gonna go home. So he doesn't run every time. Here,
those are always fun.
Yeah, here's another runner. We have a runner, because look, you got your first target out, you got to break even, and look at that, you broke your liquidity line, and then that tells you to get tight. Get tight on the yellow. When you break liquidity, get tight. See, you guys already know how to trade now. All you're doing is looking at a market recap. I don't know what you're waiting on. All right, so here's another one. So that was a pretty good week. Pretty good day. All right, so finally on March the 17th, what a week. $345 per contract on this day. The market, I believe, must have stayed in consolidation a while. And then when it did break, it wasn't real. The spreads weren't real wide. So here is one right here at 9:30, because they're obviously, the market must have stayed congested before 9:30. Is that what happened?
Yeah, exactly.
Yeah. You have to be careful in those conditions, because those are conditions that a lot of manipulation takes place. So here, but there was one for 170 and one was there. This is a pretty much a day you had to sit on your hands as well and be very, very disciplined and patient and wait. So what a week. All right. So this week there was $6,105 potential in that week using what we call the brown goose strategy of trading. Is something that we have created, and it's something that we teach because the markets are not just a bunch of haphazard, unrelated, unconnected, disconnected, movements, but it's truly, it's truly an education. And so we'd love for you to be a part of what we do. And we would love to teach you the brown goose strategy. And so this course studies brown goose trading strategy, a complete time tested and effective approach to market analysis and trading. The money market software action sequence is a unique active learning way to acquire the skills and the judgment needed to apply the brown goose strategy. What are the prerequisites for you? You must be able to identify and decipher the difference between colors, red, green, yellow, brown, and blue. If you know your colors, you can learn to do what we do. It's simple as that. And here's what you'll be learning in those classes: freshman, sophomore, junior, and senior. You'll learn pattern recognition, the Brown Goose method, charting basics, how we identify zones, price action cycle, how we understand what legs are and what they mean, and we know and understand the terms that the industry uses in its jargon. Then here's what, upon completion of the course, you'll be able to understand the 4 stages of price delivery. You'll be able to define the price action cycle. Here's the most important thing: you'll be able to identify when and where speculative positions should be entered. That's your sophomore class. And then interpret the intentions of the market maker and the institutional leadership who are acting behind the scenes influencing price action. That is what you learn in your freshman class. Then when you become a senior, you have your senior project, your term project, right? Your senior project, you participate, you trade 20 consecutive days with net positive results. And after that, you'll be ready to take the evaluation for the prop firm, potentially, and then you can get capital so that you can learn how to trade. You can go to our website to learn more and more about what we do, about our staff, about our teachers, things of that nature, at moneymarketedge.com. And you learn more about the Brown Goose strategy. This is what we teach, and this is what we name the software, because the software doesn't, it's been said that there's a golden goose who laid, a goose that laid golden eggs, but so I have a goose that lays green eggs, you see. And so we would love to have opportunity to share this with you, to understand this. And why should you use artificial intelligence? Well, it gives you a competitive advantage. 80 to 85% of all orders in the market are done by machines, whether they're limit or market orders, right? Technology creates both efficiency and consistency due to increased speed. You can't think as fast as machines. So if they have machines and you don't have machines, they have guns and you have rocks. So software provides the context. Why is price moving in the manner that it's moving? And once we understand the context, then we can execute our trading plan. And that's what we would love to do with you. We'd love to have a great opportunity to have a chance to teach you, to show you, to share with you, and to take you by the hand and walk you side by side. What do you get when you get with us? Well, several things. Number one, you're going to get daily Q&A sessions every single day. I think this is key, and this is big, because you need to speak with someone every single day about what you're doing, because it's like math class. I don't know if you remember taking math class at school, but real challenging complex mathematics, if you miss a day of instruction, you miss a couple of days, you go out for a doctor's appointment or whatever, and you get back, it's a little struggle for a few minutes to get back acclimated to what was going on. Well, this changes and it's dynamic every day. So you need to have some daily opportunities just to ask questions, because there'll be many scenarios thrown your way. The software, we give you the software and it creates the statistical absolutes. And this is what facilitators like Dennis Williams Jr. and other facilitators do. To Wheatley from New York, New Jersey, they facilitate our live trading room, and this is what they do. They use the software to do that, to get expert pinpoint analysis. And then the strategy is the same every single day. We're trying to operate after manipulation of the market by the institutional leadership, period. The support, we have people you can talk to. As you remember me showing you the graphic about how much money is in the market, you already know that there's no competition. So everybody who's in our group and environment and milieu, we help one another. We talk to one another, we encourage one another, we call one another, we show one another, and so that we work together. And then this is what leads to success. If you want to know more information about exactly what we do, how we kill in this market, this is a glorified brochure. It's not going to teach you how to trade, but it's going to teach you the mindset that we have. And it's also going to show you the possibilities and the probabilities. And most importantly, it's going to educate you on a market that you should have been educated in high school on. Hey, listen, I'm Cornelius Wilson Brown III, the Money Market Edge software company, as well as the Solomon Trading Institute, on behalf of my co-host today, Dennis C. Williams Jr. Do you have any parting words that you would like to share with persons that we're attempting to help?
No, it's just one of those. I would just reiterate. It's a methodical skill that you pick up, and it just provides just clarity and consistency.
Yeah, absolutely, absolutely. Well, God is good. So hey, listen, it's the will of God. That's what we believe, that it's the will of God that you prosper and that you do well. This is what our shield is all about. It's the will of God that you prosper on earth. I believe that's what He created us. That's the reason He created the earth, so for us to enjoy it and to enjoy Him together. And although there was a snag in the road, enemy adversary, but we have an opportunity now through witty invention and through technology to actually use the tools that are on earth to bless us and bless our families. God bless you. Have a wonderful day.